I remember when I was a kid, I was around 14 years old. It was 1994, and I was driving in the car with my mom, and I can't remember what kind of car we were driving. I want to either say it was the minivan or the Eddie Bauer Ford Explorer. I can't remember which one we had at the time. I think it was the Dodge Caravan. Anyway, I remember we were driving by, and I saw a guy get out of a Porsche. And I asked my mom, Ma, how much do I have to make when I'm older to get that Porsche? It's something that I think about quite a bit, because she said, as a single person, if you get older, you need only $50,000. I was like, yeah, you know what? That doesn't seem like that much. I can do that. Adjusted for inflation today, $50,000 is $110,000. Now, again, very doable. You can see how more and more the number is getting out of reach. And I lived in California. If you're making $100,000 a year, you're basically paycheck to paycheck, which I was. I mean, yeah, I lived alone. I could have had roommates, but if you're making over 100, you should be able to live alone without going paycheck to paycheck. But I definitely was breaking even every month I was in California with a 1-bedroom, 1-bath apartment. Well, okay, let's be honest. It was 1.5 bath and 1.5 rooms, because one was an office. They called it a 2-bedroom, but it was kind of like a half office. Anyway, I loved it. It was in San Diego, Little Italy. Loved the place. And of course, you could always live cheaper. Of course, you could have roommates, but still, $100,000 a year in an apartment, basically paycheck to paycheck. And so you continue to do the math, and even over here in Ohio, where the cost of living is quite low compared to the rest of the nation, you're still at $100,000 a year, pretty much as a single person, paycheck to paycheck, with a little bit to spare, with a little comfort, obviously. But you throw a couple kids in there and a spouse, it doesn't go as far as you think it would go anymore. I mean, I'm preaching to the choir. You absolutely know this. And the thing is, I always think about that. I go back to saying, like, when my mom said it was $50,000 a year to be able to be single and drive a Porsche and have a good life, the numbers are changing. And the idea of what value is changing. And the reason why I bring that up is because I think that we continue to talk about these, in air quote, rich people in a way that isn't the same as before. When we talk about taxation, when we talk about who gets the highest tax brackets, because the $100,000 a year person or $200,000 or $300,000 a year person isn't the same as in 1994. In 1994, $80,000 was $170. In 1994, $150,000 was more like $350,000 a year. And so if you're talking about $400,000, which we all remember 1994, well, I don't know if everybody here remembers 1994. I do. I was 14. I don't know if I mentioned that. But $400,000 a year is not the same in 1994 as it is now. And we remember these different things and the relation to money and the relation to value differently the older we get. And so we're still conditioned to think that this $400,000 is this astronomical amount. And by an inflation calculator, you could know that $400,000 is more like $850,000 a year now, right? But we keep implying these same metrics or the same kind of like value feeling we have to numbers that we remember back in 1994. And I'm not really saying that for anything, and I don't know if they have a connection to this, but Biden released his new tax proposals. And he wants to tax capital gains at a 44.6% rate and also unrealized gains at 25%. So let me go through this a little bit. First, what is capital gains? Capital gains is the profit above an investment. So for example, if you put, let's say $100,000 into Bitcoin and it goes up to $200,000, that $100,000 profit is capital gains because you have to take off your costs and then you have your profit. And so currently the long-term capital gains from this propaganda piece that I saw, actually, I've been looking through a lot of articles this morning and a lot of them are written in the way of spin. All of them are just making this, trying to downplay what this is. I'm not a fan. I'm absolutely not a fan. Anyway, this article said currently long-term capital gains are taxed at a rate of 20%. That is true and it is not true. So there's 3 different tiers for capital gains: 0, 15, and 20. If you make under $40,000 a year, you get taxed 0% on capital gains. Meaning, if you have no other income and you put, say, $100,000 in Bitcoin, it goes up to 140, and you want to just take that $40,000 out of it and keep your profit, you'll get 0 federal tax. I don't know about the state, but you'll get 0 federal tax on those capital gains. If you are exceeding that $40,000, you'll get taxed 15% on everything over $40,000. And that applies up to something like $400,000. Don't quote me on the exact numbers. I'm just spitballing here. I didn't want to look up all this morning, but it's something like $400,000 and above. Then you move into the 20%. So Under 40, 0. 40 to say 400, 15. 400 and above, 20% capital gains. And again, you have to apply different capital gains from your state as well. So over here in Ohio, 20%, you probably get taxed around 5% as well from the state of Ohio, 25% all in when it comes to taxes. Well, Biden wants to change that to 44.6%. And this article says the new rate will apply to the extent that taxpayers' taxable income exceeds $1 million. And this is where they're trying to, fudge it a little bit, because $1 million sounds bigger than the $500,000 for married people filing separately, meaning that individuals will probably have a cap of $500,000 as well. And so let's just call it anything above $500,000 is now 44.6%. Rightfully so, people took to Reddit and said, hey, if you're living in a state like California, or if you're living in a state like New York, we're talking about after they add their taxes, we're well over 50%, 53, 54, 56%. That doesn't seem right. I tend to agree. And the reason why I agree is because this is the investments into our economy. This is the investments into our business. This is the risk. We are taking all the risk as the individual, and the government wants to take very little risk when it comes to the downside. We can write off $3,000 a year of losses, which is okay, and those can be stretched out $3,000 a year over basically as far as you want in the future if you have that many losses, but only $3,000 a year. But they want all the upside, and this is the investment that fuels companies and the economy and the stock market and so on and so forth. Now look, this is probably not going to pass. This is not going to pass. It's dead on arrival in Congress and the Senate currently, unless there's a Democrat or a favorable to the administration Democrat House and Senate, and of course, Biden gets reelected. This is dead on arrival. Presidents have notoriously put out things like this to basically put out their values or virtue signal what they are trying to accomplish and what their values are as the administration. And then the House and the Senate, they fight it out and send something back to the administration. And so this is dead on arrival. It's just something that's being proposed. I'm just saying that I don't like the proposal. The second contentious part of this proposal is the unrealized capital gains. And look, it's very easy to make the other out of this because it is taxing people with a net worth of $100 million and above. And I can tell you right now, I'm about $100 million away from $100 million net worth. And most people are. But the thing is unrealized capital gains sets a bad taste in people's mouth. And also, we don't feel that it's the most moral thing to do. Why do I say that? First of all, let me put this into numbers that we can relate to. Your house. Let's say you buy a $100,000 house, and the price of that house goes to $200,000. That means you have equity in your house and a net worth of $100,000 because your net worth is in the equity of the house of $100,000. So you bought it for $100,000. You still have a loan, say for $100,000. You have $100,000 of equity in that house. Your net worth is now $100,000. If you sold it, you have $100,000 in your bank. Well, if this would pass and it would tax you for this, you would owe $25,000 of that $100,000 to the government. They say, we want you to pay that ahead of time so that we have the money so you don't leverage your assets and take low rate loans and so on and so forth, which happens with rich people a lot. Really wealthy people, they do that often. Elon Musk did that to buy Twitter. But the fact is they're going in there and they're taxing something that isn't realized. And that is the issue. It's like, I didn't make money. I didn't take money out of this. This is an investment. I bought these. Yes, number went up, but how are you going to take the future value of something that I did not sell yet? And that's the issue that's making people really uncomfortable, is that this was even a proposal, that this was even a thought that this should be allowed or a way forward to collect more tax revenue. And that's making people very uncomfortable, me included. Anyway, it was something that was on my mind this morning because I seen this being passed around last night, and I just want to tell you what was going on and my thoughts. Let's get into some crypto news 11 minutes into this. U.S. House Representatives Maxine Waters, she's a Democrat from California and about 150 million years old. She indicated the final version of the stablecoin bill could be ready soon. She said about this bill that it's all about making sure that investors and that the people are protected. And we want to make sure that the assets are there to back up the stablecoins. I don't disagree. I don't know why Maxine Waters is writing this bill, but I don't disagree with that. This latest development strengthens hope that the U.S. can get a new stablecoin law before the elections this year. Will not happen. Waters and the House Financial Service Committee Chairman Patrick McHenry have been negotiating on this bill for 22 months. Wow. And over in the Senate, Senator Cynthia Lummis and Kirsten Gillibrand introduced a new stablecoin bill, which proposed a ban on algorithmic stablecoins, which I also agree with. Will this get to the floor this year and people will vote on it? I don't know. Maybe, maybe not. We'll see. Former Binance CEO Changpeng Zhao apologized for his poor decisions at the helm of the crypto exchange ahead of his sentencing for anti-money laundering and sanctions violations. He said, "I apologize for my poor decisions and accept full responsibility for my actions." In hindsight, he continued to say, "I should have been focused on implementing compliance changes at Binance from the get-go, and I didn't. There is no excuse for my failure to establish necessary compliance and controls at Binance. Words cannot explain how deeply I regret my choices that result in me being here before the court. Rest assured that they will never happen again. Please accept my assurance that this will be the only encounter with the criminal justice system that I'll have going forward, and I'll live my life in a manner that will make everyone proud." Well, he's saying all this because he's facing 36 months in prison, and the Department of Justice said that Zhao willfully violated the United States law, and it was no accident or oversight. He made a business decision that violating U.S. law was the best way to attract users, build his company, and line his pockets. CZ will be sentenced April 30th. Before the halving, the halving that just happened a couple days ago, 900 Bitcoin was generated daily, and that was fueling a 1.7% inflation rate for Bitcoin. Well, now that we halved 415 Bitcoin per day, we have an annual inflation rate of 0.85%. Why is this important? Because now the network supply issuance is decisively below that of gold, and gold is inflating at a rate of 2.3%. Another interesting fact is when measuring gains between halvings, the asset price rose 569% in the fourth epoch compared to 1,336% in the third epoch. And the reason why it's not growing as fast and you're not seeing the prices go up as fast is because this is a natural result of a growing market size and the scale of capital flows required to move it. Meaning that if you want to double a price when you have a $1 trillion market cap, you have to have $1 trillion go into it, which is a lot different than when it was a $100 million market cap and you just needed $100 million to go into it to double. You see where the issue is. And finally, remember that televised House Financial Service Committee hearing back in 2017 where Janet Yellen was testifying and there was a buy Bitcoin sign in camera right behind her? And this buy Bitcoin sign was just scribbled on a notepad. Well, this was scribbled by a 22-year-old intern, Christian Langelis. And as you would expect, he was chucked out of the room as soon as people started seeing that. But can we just acknowledge the amount of balls that it took to do that? I mean, he's a 22-year-old intern. He probably got an internship at something that he really wanted to do. Long story short is he probably worked pretty hard to get there. And then he did this, putting everything at risk. It wasn't all in vain. Because of this, and I remember this clearly, it was on TV, Bitcoin spiked 3.7%, so hopefully he took some gains. Well, Christian now is 29 years old, and he decided to sell this yellow legal notepad with buy Bitcoin scribbled on it, and a week later it sold for 16 Bitcoin, or just a little bit over $1 million. Oh, and I lied, I have one more thing to tell you. That the United States spot Bitcoin ETF saw a net outflow yesterday of $130 million, and that broke BlackRock's iShares Bitcoin Trust's 71-day streak. They're in the top 10 of the longest daily inflows ever at 71 days, but it broke yesterday. Let's take a look at those crypto prices.
Here comes the money.
Here we go. Money talk.
And the time is 10:08 a.m. Eastern Daylight Savings Time. Fear Greed's at 60. We're between greedy and neutral. Bitcoin sitting at $63,576, down 4% in 24. Guys, we're going sideways. You'll know it when we break out of this. We're going to either break down or we're going to break up. And I don't think we're going to be breaking out of this for the next couple weeks. So strap in. Again, not financial advice. Ethereum's at $3,129, down 4% in 24. Tether's number 3, Binance is at 607, pretty much even in 24. But damn, 607 for BNB. Whew. And Solana's at 144, down almost 8%. Rounding off top 10. Wow, Solana really took a dump, didn't it? Rounding off the top 10, we have USDC, XRP, Dogecoin, Toncoin, And Cardano, the total market cap is sitting at 2.34 trillion, a Bitcoin dominance of 53.3, and an ETH dominance of 16.3. That was our show today. A little long, but I missed you. And I'll be back tomorrow. And don't forget to go to Substack, subscribe to us. We have our week in review coming up tomorrow, which is behind the $5 a month paywall. For that, you get ad-free podcasts. You get extra content like our week in review of me and Sarah. You also get my political rantings and ravings and interviews with people in the industry, all for $5 a month. Please head over there. Anyway, until tomorrow.
Happy holidays.